Welcome back, traders. I'm Cristina Barthenidu, market analyst, and you are watching my technical analysis on gold, euro dollar, and pound yen. Let's see what the technical signal suggests after gold's steepest daily decline in 5 years. Meanwhile, Japan has officially announced its next prime minister, a pro-stimulus leader, which is currently questioning whether the Bank of Japan will extend its rate hike cycle and what the timeline will be. So let's have a quick look at the charts and let's first analyze gold. Gold is back near the 4115 level following the steep decline from the all-time high of 4379. It's currently trading stable. We can see that the 20-day moving average provided support to the price yesterday, but looking to the upside, we can see that the 23.6% Fibonacci retracement level of this up leg is currently acting as resistance near the 4132 level. Well, I wouldn't exclude some stability following this steep decline because we can actually observe an Elliott wave pattern, a 1 to 5 bullish pattern, which is usually followed by some stability, a 3 wave sideways or a slight correction pattern. So we can expect some sideways move in the coming sessions, and the technical signals down here can also support this case. The RSI is trending to the downside after more than a month of stability above its 70 overbought level. Likewise, the stochastic oscillator has resumed its downward pattern following the pull back from the overbought region, and the MACD has slipped below its red signal line. So the technical indicators are currently backing some stability or some negative move in the coming sessions. So for this decline to extend, probably we need a decisive close below the 4038 and 3950 territory over here, where the 38.2% Fibonacci retracement level of this up leg is located. So if we cross below this territory, I expect the price to reach the 50% Fibonacci of 3845, and then the 50-day moving average could be the next pivot point near the 3730 zone, which coincides with the 61.8% Fibonacci mark. Now the upside, in the event that we see a close above the 23.6% Fibonacci mark of 4132, then I expect some consolidation around the 4255 zone. That was a key support territory earlier this week, so it may cause some consolidation before all the attention turns back to this key resistance line over here from April at 4400. Then beyond that, the 4500 and 4600 psychological marks could be the next resistance zone. Now looking at euro dollar, this has been trending mostly to the downside, albeit gradually. It seems that trade barriers from the US are under control in the eurozone. We haven't seen any signs of inflation resurgence so far, and there is some optimism of a moderate growth in the eurozone. Nevertheless, the strength in the US dollar has been weighing on this pair, and euro dollar is still very close to its previous support territory of 1.1560. We can even say that the risk remains skewed to the downside given the negative slope in the RSI and the negative trajectory in the stochastic oscillator, which suggests that downside pressures may dominate in the short term. So for the time being, we are still within a consolidation phase, but if the 1.1560 floor breaks, then I expect steep downfall towards the 1.14 level, and then below this, the 200-day moving average at 1.1285 could next act as support before we reach the 1.12 psychological mark. Given the negative cross between the 20 and 50-day moving averages, that's another reason to expect further weakness in this market. However, if the price manages to surpass this territory between 1.1655 and 1.1730, also surpassing these key former broken support trend lines, then that could boost the market sentiment and therefore may increase chances for a steeper rally towards the 1.1950 territory, where this resistance line that connects the highs from July and September is located. And finally, looking at pound yen, Japan's new prime minister, pro-stimulus leader, which is currently questioning how fast the Bank of Japan could raise interest rates, has been waving on the Japanese yen. That added extra support to pound yen. Therefore, we had a nice rebound near the 201.20 and 202.30 territory, where this support trend line coming from March 2025 is placed. So technically that increases the odds for more upside in the coming sessions, and I expect, if that happens, I expect the price to reach this resistance line at 206.40. Beyond that, the 208.30 territory could be the next barrier taken from June's 2024 highs. Now, in the alternative case, basically, if we look at the technical indicators, we can actually say that the risk is skewed to the upside. The bullish scenario might be likely. However, in the event that the price reverses to the downside, crossing below the 20 and 50-day moving averages and falling below the 200.30 level, then I expect support to emerge near the 198.55 zone. That's where this tentative support trend line connecting the lows from August and October is placed. Slightly lower than that, the 38.2% Fibonacci retracement level of this up leg has acted significantly as support back in October, earlier this month. So I expect this level to take some action again. If not, then we may see a faster decline towards the 200-day moving average, currently seen around 109.30. So, looking at the technical indicators, both the RSI and the stochastic oscillator are pointing to the upside, so that is currently endorsing the bullish scenario of further gains. But let's see, it seems that the bulls could dominate, keeping the focus on the 206.40 level. Otherwise, these key support trend lines could attract attention. So that's everything I wanted to share with you guys. Thank you for watching. If you liked my video, please subscribe to this channel and like my video. We'll be back next week with more analysis. Thank you for watching, and wish you have a great trading session. Bye bye for now.